Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson with Allendale. And we did see some higher closes in the livestock today. Grains a little bit more mixed. But I want to start off talking about corn, Rich, fifth higher day. And, what's been pushing that market? Has this all been just short covering? I know the funds are pretty short here heading into the end of the quarter.
And that sure is right. Over 7 days, we picked up about 20 cents off these lows. So good small rebound we've seen for this corn market. I do think this is an issue where we got the month end, quarter end, of course, USDA reports, questions about whether we'll have an October 12th USDA report regarding yields. So I think a lot of things have added to a little small cushion, at least for the very short term for this corn market here.
So we did close above a little bit of overhead resistance here today. What do we need in this market to keep this rally going? And have we put the harvest low in?
Frankly speaking, we need about a 300 to 400 million bushel drop in ending stocks, not production, in ending stocks to hold December corn at $5. So I think at this point, this is still a discussion about a harvest low, which is probably quite a bit of ways off. Concerns about the Argentine corn crop are validly keeping us above economic value right now, which is fine. But at some point, we probably will have this issue fixed up if and or when we do get those returning El Nino-based rains in these coming weeks next month here.
Yeah. So much has been made here as of recent about poor demand and exports in the corn. It looks like for the total commitments here for this marketing year anyways, we're doing a little bit better. Are you encouraged by that? And, do we need to be worried about this sale that we heard about with China buying Ukraine corn?
On the corn thing, I think USDA can more or less avoid a lot of concerns for corn specifically on the export sales discussion, at least in the very short term. U.S. and Brazilian corn prices, as far as export bids, they're really close to each other right now. So this is not a major concern here just yet. One thing I will note regarding the Ukraine purchase discussion here today, keep in mind, a lot of us don't have any large expectations for China to buy U.S. corn specifically. Bookings right now, only about 700,000 metric tons. And keep in mind, that's probably going to be maybe doubled at most, which is still not much out of China's total import, which will be 23 million tons. So I do think the corn export story is okay for now. We probably will have to revisit the discussion in the next 2 to 3 months, though.
And the soybean market, boy, it feels like we've really been struggling there. We did close back above the $13 mark today, but, can we hold that mark, especially with harvest pressure coming at us? And then do you think that a lot of this pressure has just been coming from the fact that maybe exports are running behind our pace of a year ago, or what?
I do. The concern is that our past 3 weeks for U.S. soybean export sales have been quite poor. So we started the year in September 1 officially, and our numbers, in fact, for this week's sale we just saw on Thursday, this was 47% below the 5-year average. So sales have been weak in recent weeks. On top of this, we've got the Brazilian pricing discussion. They've got us beat $18 per ton in the short term. That will advance to about $1, the equivalent of about $1.70 here in about 2 to 3 months. So I think those issues, along with the river situation here in the U.S., still give us a lot of concern about this export hit, which would probably offset what we have lined up for a yield decline in next month's report here.
Yeah. Wheat market, more new lows for the move in Kansas City and Minneapolis wheat, even though the dollar was down today. Has the dollar been part of the story that we have not been competitive? And so is demand the issue, or do the specs just continue to want to sell that market and be short, or what's going on?
I think our overriding story for wheat is still we're not being priced off of U.S. or world balance sheet numbers. We're being priced off of two main issues. The fact is the trade still feels they're going to get the Ukraine-Russian grain no matter what the headlines are. I think that's actually a valid discussion. Additionally, we can point out perhaps monetary policy, this discussion about interest rates staying high pretty much for quite some time ahead. That still is a discussion, which also for wheat specifically does give us a little pressure here. So keep in mind for the wheat side of things, this is still a story being driven probably by more outside market issues than wheat numbers right now.
And we do have the big reports tomorrow, or at least let's talk about quarterly stocks, because sometimes those have been big market movers, at least on corn. So anticipation there, what are your average expectations?
Sure. So the trade expects the final stamp on old crop ending stock numbers to be about 24 million bushels under what USDA had previously said back on the 12th. So they do expect a light decline on ending stocks for the old crop side. It probably will not be enough to change the general new crop corn story, though. For soybean, the trade expects maybe about an 8 million bushel decline in stocks. But keep in mind, in the past 3 years or past 5 years, we've seen these numbers being adjusted anywhere from 40 to 90 million bushels. Keep in mind, 50 million bushels is the equivalent of 70 cents to $1.05. So where the stories may not change for corn, it looks like we can have some interest for these numbers for soybeans specifically here.
Yeah. What about wheat? We do get small grain summary as well. If we get a change, Rich, is it likely that it might be spring wheat yield maybe being a little bit higher?
On this one, that's a really good question. The general trade discussions may be slight declines for both winter as well as spring wheat, but very minimal. I believe that the average guess is only a 5 million bushel decline in these numbers for production. As far as the wheat story, I got to point this out, though. Last year, we had a 133 million bushel revision lower in this wheat production estimate. So a lot of us are saying for right now, ho-hum, it should not be a major report for wheat, but in recent years, we have seen some price movements off of this year.
And the cattle market, kind of a nice bounce here today. Was that all technical?
I do think a discussion about this cattle market is tied right now, at least in the short term, with this overall economy issue, the shutdown issue, as well as more specifically the stock market performance. We did have a rebound for prices on the stocks on the stock side here today. As far as overall discussions, though, a lot of us still hold a little concern here. So we do think that cattle prices will be able to hold this general strong discussion we've had for quite some time here. In the grand scheme, or in the short term, though, can we have little disruptions? I think we can. So in the very short term, we put in new highs for the October contract here today. Deferreds were not that active, though. So that's a little concern. Also point out the feeder side, after this $12 drop, we've only had a rebound so far of only 2 here.
Yeah, we did some technical damage to the charts on feeders, didn't we?
We sure have. And I find it really interesting because there are 2 small intraday gaps still waiting at higher prices from this prices we were at just from last week. So far, we're not really seeing a lot of interest in going and revisiting those higher prices. So at least for the feeders, maybe we can have an argument for a small disruption that perhaps might not be reflected on the live cattle pricing here.
So the bulls, obviously, in the cattle market, talk about tight supplies, that we're not even into the tightest supplies yet. The bears speak to your argument, as we said, about the economy, about interest rates staying higher longer, all those things. What's your experience? What wins out in the end?
In most cases, in most years, the discussion about demand is often more of a much bigger issue for our highest priced protein, which is a premium product, in most cases. In this case, though, where we're pretty much looking at a multi-year decline, at least into 2025 for U.S. beef production, if not more so into 2026, I think in this case, the live cattle side will eventually win out. So yes, we can have some disruptions here and there based on concerns about the economy, which is valid. Keep in mind we did have some significant problems in the previous recession. For right now, though, I would suggest that the supply argument is going to be the much bigger issue here.
And the hog market rallied going into the hogs and pigs report with maybe some speculation we'd see some contraction. Talk about what we did see in the report. What was your takeaways?
So as far as our bull argument, which I had been expecting for this report to show, we were kind of disappointed. I'll make that very clear. A lot of us had noticed that sow slaughter here since mid-April has been about 8% over last year. That was reflected in a smaller breeding herd. Breeding herd numbers 1.2% below last year. The math does work on that. So yes, we do have a lower breeding herd based on the sow slaughter issue. I think we're quite disappointed on the productivity, though, of this breeding herd. In that previous March-May quarter, USDA suggested pigs per litter up 3%. Here we are June, August, and now they say in this case 4% over last year. So yes, we do have smaller farrowings and farrowing intentions, but a lot of this is being overshadowed by this large increase in productivity. So I think a lot of us were concerned about the 2024 picture, which may have been about a 2% lower pork production. Now we can say it's going to be just minimally under this year.
Yeah, and even the all hogs and pigs number was a little bit above expectations. So Do you think, is it a two-tiered market? Do we continue to see that where we have to chew through the big upfront supplies before we can get to maybe some of those tighter numbers in the back?
We sure do. And it won't be until spring of next year that we begin to see these numbers really kind of slightly ease off. The other concern about this issue is not just with the supply forecast, it's also with the fact that as we go into this January 1 period up ahead with California's Prop 12, we have concerns about how much production will be available to meet that 14% of U.S. demand, which qualifies for their specific qualifications. So I think on this issue, we still have some light concerns in these next few months ahead before we get to better news after next spring here.
Rich Nelson with Allendale, and that's Markets Now.